As expected, the Fed raised the rates by 75 basis points, and it's time for a post-FOMC brief market update. The US dollar strengthened noticeably yesterday. We see a bit of a green candle over here as the Fed was hiking rates. The USD daily cycle is already 43 days old, and average cycle duration is 2 months. So while USD can still trend higher for perhaps a few days, I would expect the US dollar to decline to at least a daily cycle low anytime within 3 weeks. The intermediate cycle is a bit tricky. On one hand, it's extremely long at beyond 200 days already. On the other hand, the August drop doesn't look severe enough for an intermediate cycle low. So if the August low was not the intermediate cycle low, then a severe drop is coming soon for the US dollar. And this is my more likely scenario. If, on the other hand, the US dollar is already in a new intermediate cycle since that August low, then it can stay strong for at least a couple of more months. Moving on to gold, while the USD has gained a lot in the last few days, gold has actually held its ground pretty well in the same few days. That is promising. As I mentioned in a recent video, my most likely scenario for the intermediate cycle in gold is that it's still ongoing. Alternatively, gold is in a new intermediate cycle since July low, and if the intermediate cycle is still ongoing, it's likely to finish sometime soon, and we're going to see a significant rally into a new intermediate cycle over the next couple of months. But if gold is already in a new intermediate cycle since July, then the recent lower low versus the July low suggests that gold might keep sliding down for another 2, 3, 4 months. The daily cycle on the gold is already slightly above the average duration of a couple of months, so at least a short term, maybe also an intermediate term rally is coming soon. Next, looking at the stock market, our latest sale that took us out of the stock market was on the 19th of August. Marked by this circle near the top. By the way, join us at myfinancesteacher.org for regular updates on stocks, precious metals, energy, crypto, and commodities. Before the FOMC, I discussed two likely scenarios with the members at MyFinanceTeacher. A short-term bounce into a new short-term daily cycle low if the Fed talks somewhat dovish, even while hiking by 75 basis points. Or a new daily cycle that has already started at the beginning of September, that has already topped and is already sliding down into the cycle low. By now, of course, it's clear that the second scenario is playing out, and it feels good to be out of the market at the moment. Looking at crude oil, as oil has been approaching the average duration of its cycle, I've been gradually accumulating over the last few weeks. At the same time, I emphasize gradual accumulation, so I still have enough cash in the energy portfolio. As the previous two cycles in crude oil were quite short at 104 and 130 days long, the current cycle might actually stretch. If we haven't seen the low on 8th of September, the current cycle might stretch a little bit to restore the average duration back to somewhere close to 170 days or so. The optimism index on crude oil is already below 40, it's at 38. Historically, cycle lows usually come with the optimism index somewhere around 30, so while price and market optimism in energy might still decline for a while, the low is likely approaching anytime within the next 3 or 4 weeks. And that's all for my brief post-FOMC overview of the markets. Share your opinion on precious metals and energy as well as the stock markets down in the comments below. Remember to give a like to this video and share the video with your friends.